Hey guys, Spartan from SpartanTrading.com. Want to hit you guys with a quick video on some educational content. I think this is a good one to do for this week. Good one to do at the beginning of the year as well, because this is something that you can use throughout the year, and you'll probably use it for the rest of your trading career. If maybe you learn it from me, maybe you learn it from someone else, but it's a really good concept to understand. Now, what I'm talking about is when we get volatility in the SPY. Now, when the market has volatility, whether it's to the upside or the downside, we get large moves from the previous day. There's a couple different types of price actions that typically happen, and they happen quite often. They repeat this pattern. And what I'm talking about is basically head fakes the next day to the upside or the downside. Now, there's typically two ways things can go. In the morning, you're going to get a market open up after a big gap down. Market's going to either push to the upside, you'll get a head fake to the upside and start to pull back down, or it's going to, after a large move like this, pull to the downside, head fake to the downside, and you start to get a huge bounce. Now, the reason why these moves typically occur after large movement is because you have one of two things happening. You have, let's say it happens after a big short sell. Guys could be coming in short, what have you. If you get a nice pop to the upside in the morning, these guys, it could be a pop from covering that's causing it. There could be guys that are jumping into it long, guys or gals, doesn't matter. Traders jumping into the stock long, and then the big sellers come back in, basically head faking it to the upside. You end up getting a pretty robust sell to the downside. So if you start to see a gap down and then a push to the upside and it starts to stop, or you start to see sellers coming in, you should have in the back of your head, probably head fake to the upside, probably going to see some continuation to the downside. Don't continue to keep buying on that type of action. Look to actually sell or flip short. It's exactly what we did today. We prayed it long outside the gate. I kept saying, I don't know how long this bounce is going to last. It seems like a bounce. We started to fail to the upside. I said, okay, it's a head fake to the upside. Let's look at start grabbing some puts or going on the short side. We ended up pulling to the downside into some support, and then we ended up playing long off of the EMA support on the daily of the SPY. Now, vice versa, the same thing can happen when you get a big sell day to the downside, guys. If you're looking for a larger bounce, typically what you'll see is a head fake to the downside. So market will see some volatility. You get a head fake to the downside. I could try to find an example. I don't think there is one as of too late. Potentially here, actually. Let's see. Yeah, I guess kind of. Not necessarily. There we go. This is a good one. So market's kind of be selling off, get a little bit of a pull to the downside. This is what I call a head fake to the downside, where you get that initial pull, and then you start to get a big push to the upside where short sellers are actually getting stuck in the name on the short side and are being forced to actually cover out of it. Basically, what you're seeing is it could be at recent range lows, or sorry, last day's lows. It could be at, it could just be at, certain support level or EMA support level on the daily. Doesn't matter. But what you're seeing is guys are anticipating, or gals, anticipating more downside. They're getting more short. They're coming in, and what actually happens is buyers start to step in. Everyone that got short that morning is going to have to cover. Everyone that was short from the last day is probably going to be forced out of their shorts. Buyers are going to continue to pile in. It's going to cause a lot of buying volume, which will cause essentially a squeeze to the upside. That's truly where you get your big bounces on these downside days, is where you get that head fake to the downside right away, right out the gate, and then buying, pushing it back up, pushing the market back to, going from red to green, and then you start to get the actual squeeze. Now, today was a weird day where you got the head fake to the upside. You pulled back to the downside into support, and then basically it stayed range bound. Days like today, when you start to see that, up, down, then unable to get through that high action, I typically say, and I tweeted this right when it happened, I said, I think it's going to be really choppy in the afternoon because of that action. Then it ended up being. So I guess that's just one more takeaway. But the key thing I want you guys to just understand is that head fake action that can happen after large volatility days. That's what I look for. It doesn't always happen, but it does happen often. Nothing happens 100% in trading, but there are patterns that tend to repeat themselves. So I think it's worth noting and understanding that concept. Anyways, if you guys have any questions, you go to SpartanTrading.com. Visit us there, of course. You can reach out to me on Twitter. Otherwise, thanks for watching, guys. You have a good rest of the week, and I'll see you guys tomorrow if you're in the room.